you were very clear that you don't want to buy consumers. It was an underweight position for you, and pharma was also an underweight position for you. Consumers have corrected and pharma has gone higher. Let's revisit those two sectors.
No, I would say that pharma has certainly corrected sharply from the highs. Yes, from the bottom it has bounced back, and I don't have a very clear view on pharma now, because I think it is neither too cheap nor too expensive in my opinion. I think as far as consumer is concerned, there are two segments there. One is the consumer discretionary and one is the consumer non-discretionary, what we call the FMCG. I just feel, I have no very strong numbers behind it, but I feel that in the current environment, when retail loans are all set to moderate, interest rates are set to go up, borrowing costs will go up, I think the consumer discretionary spending should moderate, which will actually be very good for the economy, because the high current account deficit is a direct result of very high growth in consumer spending, and the government is also increasing customs duties on few consumer discretionary items. So I don't think it will be negative, but if growth slows down, I think the current prices, even after a meaningful fall in last few quarters, I think are still not discounting lower growth rates. So I feel that there could be still some, the outlook to my mind is mixed or not so good. The consumer staples, I think they will continue to report stable growth rates. That's the nature of no one borrows to buy a soap or a shampoo or a toothpaste. But I just feel that the multiples are there very high, and when profit growth becomes more broad based, some people may want to move into these sectors which are cheaper and now beginning to grow faster. So I would still not be very positive on the consumer discretionary and the non-discretionary.
So consumers can go through a time-wise correction and also price-wise correction, because the growth slows down, earnings compression will kick in.
It could be both, and I don't think we can forecast that. It could be both. It would depend. In the past, what we have experienced is that consumer staples, the FMCG, experiences more of time correction. But sometimes you have seen price correction also. But the consumer discretionary space in the past has delivered more price correction.
2 years ago, you went underweight on consumers, and you pretty much have not changed your thesis around it. Your view has been consistent, and that's what makes HDFC AMC a differentiated AMC. But I'm sure that call must have hurted you in 2016 and 17.
So see, yes, it definitely. So we are focused on the medium to long term. We have always told investors, whenever you are investing in equities, think 3-5 years and probably even longer. Timing is not in anyone's control, neither in my control nor. So what we are saying is we are trying to assess the fundamentals over next 2, 3, 5 years, and accordingly we are making portfolios. And we must also appreciate that all of us live in a dynamic environment. Things change. Oil one day was 40, oil one day was $80 today. Steel prices fell to all-time lows or 2-decade lows in 2015 or thereabouts. So what recovery you were expecting got pushed back. So I think, but still I have seen that if your understanding of the business is correct and you take a sensible view of valuations from a longer term perspective, if not over 2 years, over 3 years, 4 years, I think those views tend to come out right.
Another, I would say brave, because to buy metal stocks 3 years ago, 2.5 years ago, indeed was brave. You bought a lot into steel companies. Is the cycle looking vibrant for metals and especially for steel?
So let me put it this way, if you look at Nifty, in my opinion, barring the consumer discretionary and the non-discretionary space, I think most of the other sectors either look fairly valued or undervalued.
That's an interesting point,
yes.
Excepting consumers.
Except consumer discretionary and non-discretionary. I feel India's market cap to GDP is very reasonable. So, and many people are confusing the markets with a bad macro or I would say normal macro. It looks bad compared to where we were 3 years back. But I think for markets, the profit growth, the micro matters more than the macro. last few years we had great macro, then why did markets not do well? And now when macro is normal, why are markets doing well? Because profit growth is coming back.
You are a firm votary of cycles. Over the years, I've looked at the presentations from, HDFC AMC. Your interaction seems to be indicating that you believe that every market has a cycle. It was TMT, followed by commodity and expansion in some of the capex themes. Then came consumer. Now NBFC. So next 3-4 years, what is the big cyclical trend or cycle according to you?
So I think what we have experienced is that some sectors which are delivering very high profit growth in the near term tend to develop a popular following and they tend to become overvalued. And sectors which are passing through a pain period, they tend to become undervalued. And I think this keeps on repeating. So if you look at last few years, some of the most stressed sectors have been metals, corporate banks, capital goods, capital spending. And I think these are the sectors which to my mind look quite, we are overweight these sectors and the outlook is reasonable. I think utilities is another sector which experienced moderate growth for last few years for at least in some companies. And I think if you look at some of these stocks, they are trading significantly below longer term averages. So as I again said, barring consumer discretionary, non-discretionary, most sectors look to be either reasonably valued or undervalued. And I think we should focus on micro for profit growth and what are we paying rather than get distracted with the macro. And incidentally, a lower rupee and higher interest rates are good for Nifty's profit growth. So most people miss that. If you look at a depreciating rupee, it positively impacts sectors like IT, pharma, metals, oil and gas, because a dollar of GRM was 60 rupees, now it is 70 rupees. So these are sectors which are positively impacted, maybe a few more. Banks and utilities are not impacted because they have no currency does not move. So there are even FMCG tends to benefit in an indirect way because lower rupee means more inflation means higher consumer prices, so your nominal growth will actually go up. So I think if you look at it this way, 70-80% of Nifty is either positively impacted or not impacted by rupee. Similarly, if you look at interest rates, while normally, and it is right also that higher interest rates are not good for economic growth, but I think if interest rates go up moderately, it does not impact economic growth as much as it impacts positively the banks.